Hello everyone, this is Jim from the Art of Finance. Welcome back to our channel. We are with you on 10th of June, closing the week video. Alright, on this video, we will just let you know some news, then we will just go ahead some charts. And as you know, in like 1 hour ago, we have received inflation rate of US. Then the market just reacted to this one so high. So expectation was 8.3 in inflation rates, and like in March it was 8.5, in April 8.3. So everybody just expected that, all right, there is a decline, so we can expect 8.2, 8.3, something like that, and we have passed the peak time. But it didn't happen like that. It was reported as 8.3, 8.6. So that means 1% interest rate hike didn't work out, and we need more than one, because US officials and Fed officials cannot control the price of energy, price of oil, so they will just go ahead and they will disrupt the demand. They will just find a solution on that. We will see how it will affect the markets. All right, let's start with our first chart. As you can see, our first chart is dollar index. And why I'm just showing in a big perspective, because as you can see here, over 104 level is struggling, and right now just get closer to that level, and it's just testing that level. If we just see more of these level, we can expect 105 level. That's critical. It will just make pressure over everything. All right, let's look at our second chart.
You are ready to win with us. GAN Market.
All right, our second chart is gold. As you can see here, gold made decline, steep decline, and it just tested in 1825. Then from this level, it just go back and forth, and now it's just making a jump. So the reason is, from this low level, some people just bought the gold, and then it just rises so fast. But in long term, what can happen? As you know, when interest rate goes higher, then that means US bond yields goes higher as well. When US bond yield goes higher, then we know that a pressure over gold and silver happens. That's why it's obvious that if you see rising US 10-year bonds from this level, we will see decline in gold in just this channel. As you can see, it doesn't want to give up on this channel. It just wants to stay in this channel, but we will just see more declines with interest rate hikes next week in Fed official. In Fed meeting by Fed official, it will be announced more and more rates are on the way. Let's look at our last. All right, as you can see here, oil prices are on big decline. Reason, because energy prices was the key contributor to inflation, and the first target to curb this inflation will target oil prices, because if we don't see any easing in oil prices, we cannot mention on any easing in inflation. You see, it's all rising and just a lot of room to go down. So we will just expect to see down at least 110 levels can be seen in coming days. But the Fed is trying to right now create a demand destruction in markets, and then even they want to see higher level of crude oil stocks. If that happens, we will see lower level of price, but if it doesn't happen, then we will see more crises on the way. Thank you so much for watching us. We will be together on more news, and then we will just cover more charts with you. Have a nice and profitable day. Bye.